Welcome to the recorded workshop session for the Accounting Distance module.
So we now have dealt with the accounting equation, the elements of the accounting equation, and now we are going to deal with the subsidiary journals. So all these transactions, eventually we put them in what we call subsidiary journals. So subsidiary journals are the books that we used to record transactions. All right. So usually we get, in an assessment, you get given a whole lot of transactions. And then we've got so many books in which to record those transactions. So the skill that you need to develop is to determine to which book you need to take a transaction. All right. So to make it easier for you, we are going to break these books into categories. All right. We call them subsidiary journals. All right, so the books we use to record. So the first category, it's the books that we use to record transactions involving cash. All right, so you can see the key word here, cash. So cash is king. So we know that the business can buy or sell things on credit. All right. So in this category, the books falling within this category are used for transactions involving cash. So here, cash is non-negotiable. No credit in this category. All right. So what is the first subsidiary journal in this category? We call it the cash book, receipts journal. All right, others call it cash receipts journal. It is the same. So the cash book receipts journal. So in this book, we record all transactions involving receipt of cash. So look, because it's receipt, we are not paying, we are receiving. And what are we receiving? We are receiving cash. All right. So all transactions involving receipt of cash So all your transactions involving receipt of cash are recorded in this cash book receipts journal. So you can see that the same thing is important. You must be receiving. And what are we receiving? It must be cash. So whenever we receive cash, it must come to the cash book receipts journal. And then another book that we use in the transactions involving cash category is the cash book payments journal. So in the cash book payments journal, here we are no longer receiving, but we are paying. All right, so here we are making payments. How are we making these payments? For cash. All right, because here we involve only cash. All right, so here we record transactions that involve the payment of cash. All transactions involving payment of cash. All right, except petty cash. All right, because we know that some payments we can do them by petty cash. So in the cash payments journal, we record everything involving the payment of cash, except if we are using the petty cash to pay. And the reason for that is because we've got a separate book called the PT Cash Journal. All right, so you're going to have the PT Cash Journal. So in the PT Cash Journal, we record all transactions, all right, involving payments by PT Cash. All right, so whenever we are doing payments and we're using PT Cash, we're going to record them in the PT Cash Journal. So that is the first category. So let me repeat. The first category involves transactions that have to do with cash. So most important, no credit in this category. All right, so let's go to our second category. Sorry. All right, the second category are transactions involving credit. Transactions involving transactions on credit. All right, so you see the difference between the first and the second category. Here we're talking credit. So if anything involves cash, it can't come in this category. So in this category, we have number one, we have what we call debtors journal. All right, so that's our debtors journal. So the debtors journal is where we are selling inventory on credit. So whenever we sell inventory on credit, it will come to the debtors journal. We remember the person we sell to on credit, we say that person is actually called a debtor. So that's why they come in here. So here is transactions involving sale of inventory on credit. All right, so here, sorry, so here we are selling inventory and we're selling it on credit. All right, so look at the key word. We are selling, how we're selling? We're selling on credit. With respect to the debtors journal, the other keyword is inventory. All right, so it's very important because sometimes we can sell something which is not an inventory. So let's just say that we are Pick n Pay. Our inventory will normally be the grocery and all the items that we have, all the goods we have in the shop that the customers buy. But sometimes Pick n Pay can decide to sell a truck. All right? So truck will not be inventory for Pick n Pay because the truck is not part of the stock for Pick n Pay because it is involved in the sale of goods. All right? Which is your grocery that you buy. All right? So that's why we emphasize inventory. If we are selling, ask yourself, are we selling inventory? And if we're selling inventory, it must go to the debtors journal. All right, and remember that the word inventory is basically synonymous to goods. If they say sold goods, they are just saying we have sold inventory. And sometimes they can say sold merchandise. All right, or sold trading stock. All right, so this is all the same. We just use different words, but it's all the same. So for debtors journal, very important, we're selling on credit, but the only thing we are selling is inventory. All right. So in this category, the other journal we use is creditors journal. Creditors journal. All right. So in the creditors journal, what are we going to use? What sort of transactions are we dealing with? So here we're talking about transactions involving purchase of goods or services on credit. All right, except the assets. All right, I'm sure by now you remember. So these assets are your non-current assets. Okay, I'm just going to say non-NCA don't say it's National Credit Act. All right, non-current assets. All right, so in this journal, you are purchasing goods or services on credit. That remains the key word. Except when you are purchasing non-current assets. All right. So that's your transactions involving credit. That's the second category. And then we've got the third category. So transactions involving returns of goods, all right, and services. All right, that were traded on credit. All right, so it may happen that you sell something on credit, the customer is not happy about it. What will they do? They will return it to you. All right, because if the customer bought something on credit for 1,000 on credit, so the customer is going to owe you 1,000. If they bring it back, then their debt must actually go down. So if we sold and the customer is not happy, they return, or we overcharge the customer. So that's the transaction will go into what we call debtors allowances journal. So you see the name is linked to that. So we're going to have debtors allowances journal. So here we're talking about transactions involving returns or rebates of goods sold on credit. All right. So a rebate, we're going to give it if we had overcharged the debtor, we must actually reduce. So if the debtor returns, then it must go to the debtor allowances journal. And then the second journal in here will be the creditors allowances journal. All right, so this one will be the same explanation, but this will only involve the creditors from whom we bought the goods. So if we bought goods and services from creditors, we're not happy, we can return those goods to the creditor, and that will come to the creditors allowances journal even when the creditor had overcharged us. All right, and they need to reduce our account, it will come to the creditors allowances journal. So it will be a similar calculation, but it will be for transactions that were in the creditors journal. All right, if we have returns and rebates, all right, for transactions that were in the creditors journal, they must come in here. If we return goods to the supplier or the supplier had overcharged us. And then we go to the last category, category number 4. Is transactions not falling within the above 3 categories. All right, so transactions not belonging to above 3 categories. Where do we take them? We take them to a journal called general journal. All right, so if the transaction doesn't fall within the above 3 categories, we take it to a general journal. That's why we use the word general. It's not specific. Anything that does not fit in these 3 categories must come here. All right, and the other thing that you should know before we can start dealing with our exercise, because we're going to apply this, is we talk about amount inclusive of VAT, All right, so I just touched on that a bit earlier. So if we have got 114 and they say the amount is inclusive of VAT, all right, to determine the VAT amount, we take this amount, we multiply by 14, which is the VAT percentage, divided by 114. So your 114 is actually 100 plus the VAT percentage. So it gives you the VAT amount of 14. So the amount excluding VAT will therefore be 100. All right, so your amount excluding VAT will actually be equal to the amount inclusive of VAT minus the VAT amount. So this gives you 100. All right, so that's how you work out the amounts. So now the question is, when they have given you amount exclusive of VAT, how do you get to 114? If they gave you 100, which is the amount exclusive of VAT, how do you get to 114? So to get to 114, if you have got the amount exclusive of VAT, to get to 114, you just take the 100, you multiply it by 1.14. If you take amount exclusive of VAT, you multiply by 1.14, it will give you 114. All right. Or should we try it? Let's try it. So we want to see if we will get to 114. So we say, okay, 100 times 1.14, all right, equals to, oh great, so we've got our 114, all right. So if we want to get back to the amount inclusive of VAT, we just take the amount exclusive of VAT and we multiply it by 1.14, all right. So if we want to work out the VAT amount, just take 14 over 114. All right, so this is easy. All right, so now we don't need to waste time. We know the categories. We know how to calculate VAT. All right, and then we know the amount exclusive of VAT and the amount inclusive of VAT. Sorry, so let us distinguish between the VAT. All right, I spoke earlier, so I'm just repeating myself here. So we say the VAT output comes into the picture when you sell the goods. So your VAT input is the opposite. Your VAT output is when you sell the goods. So your VAT input is when you are purchasing or paying for goods and services. All right, so that's the VAT input. When you are purchasing or paying for goods and services, you will actually you will be paying your VAT input, but VAT output will come through when you sell the goods and services. So VAT output is when you're selling, and VAT input is when you are buying. So you will actually see that your VAT output will actually come through when you are selling goods and services, and then your VAT input is when we are paying for goods and services. All right, so we'll see in our exercise. All right, so what we need to do now, we need to go to our transactions and be able to implement what we just explained to you now. All right, so let's just put this in perspective. So this is our exercise. All right, so let's just, okay, so this looks better, much better. All right, so what is important is let's just look at what the question is saying, and then we should. All right, so this one is what we did earlier. So let's just, so maybe we can close this one. Okay, so let's close this one so that we can just deal with our activity. So this is in your activity book. All right, so let's just look at the question, and so that we can deal with it nicely without problems. Okay, so let's look at the question. So you see the question wants the creditors journal. So that's number one. It wants the creditors allowances journal, cash book payments journal, all right, and general journal. So that's what the question is looking for. So because we've got so many journals, so the assessment will not always ask you for all of them. All right, they will choose all of them. You must just know how to determine where the transactions are supposed to go. All right, so the skill that you need to develop, all right, when you deal with this, is to be able to identify the transactions. All right, so let's just see. So as you can see, on the question, they give you the columns that you need to use. For instance, for your creditors journal, they show you that you use creditors control, you use VAT, you use trading inventory, and sundries. All right? And then for creditors allowances journal, it's creditors, it's VAT, and then it's trading inventory, it's sundries. All right? And then for your cash book, it's bank, it's creditors control, it's VAT, it's trading inventory, and it's sundries. And then you've got a general journal here. All right. So let's just start with our creditors journal and creditors allowances journal and see how they are actually processed. All right, so let's just look at transaction and see if we can comfortably identify where they're supposed to go. All right, here we go. All right, so let's see the first one here. So yeah, so I think it all starts here. Okay, so let's just look at this. All right, so here we go. So they say source documents of Milano traders for the month of October 20.7. So you see they give you transactions like this, and you need to work out exactly to what subsidiary journal you need to take each transaction. So I want us to look at this form. All right, let's just erase this so that it looks nice and tidy. All right, so here you see you are buying inventory, and then you see the source document says it's invoice. IV means you are using invoice. All right, so if you use invoice, what does it tell you? Are you buying on credit or are you buying for cash? All right, if you get an invoice, it tells you you are owing something, which means you have bought on credit. All right, your invoice tells you there is credit involved. All right, so when they say the source document is invoice, it means you bought this inventory on credit. All right, so then we go to our categories. We want to see where this actually belongs. We said the first category involves transactions that involve cash. And then we ask ourselves, are we involving cash? No. Then it can't belong in the first category. We go to the second category and we say, in the second category, we're dealing with transactions involving trading on credit. All right? So invoice is telling us we are dealing with credit. And we know we have two subsidiary journals in the credit category. It's debtors journal and it's creditors journal. All right. Debtors, we sell to debtors, but we buy from creditors. All right. So here, because we purchased, it means we were buying. To purchase is as good as buying. All right. So this transaction is telling us we have bought on credit. All right. So this one will therefore go to the creditors journal. All right. So the moment you know where it goes to, the problem is out of the way. All right. So let's look at the one on the fourth. They say Leak City CC435. All right. So payment for business plumbing services, repairs and maintenance. All right. So here they have made a payment. All right. They have made a payment. So they are telling you that we have made a payment. All right. So CC basically stands for a cash check. All right. So they have used a check to actually make this payment. All right. So because we are dealing with cash, you are in the first category because we said is transactions involving cash. All right. So if you are paying, we say it must go to the cash book payments journal. All right. So if you are paying, we said it must go to the cash book payments journal because you are making the payment. All right. So it is disappearing on us. Let's go back to it. Oh, so we are basically on it. So we just need to go back. So let's just go back to it. Okay, let's try open it up here. All right, let's just see. Okay, so here we go. All right, so we get to the third transaction here. So they say here we are trading inventory return to the supplier. You see here, we are returning goods to the supplier. All right, remember, we have the first category, which is transactions involving cash. So group number 2, when we are buying or selling goods on credit. So this one puts us in the third category, because we say in the third category is when we are returning goods, either ourselves to the supplier or the debtor returning goods to us. And then we say if we are returning goods to the supplier, it will go to the creditors allowances journal. Sorry, so if we return the goods to the supplier, it goes to the creditors allowances journal. Sorry. See, it's not going there. Oh, so it's going now. All right. Okay, so the fourth transaction, so we say this one is going to the creditors journal. This one is going to the cash book payments journal. And then here we are returning to the supplier. So this one is creditors allowances journal. So here, when we drew a cash for petty cash, so it's basically we are taking money, because we're just taking a cash, we go to the bank. Instead, it's as if we are buying petty cash, because we issue a check and they give us the petty cash that we can use. So it's as good as we are making a payment. So it will go to the cash book payments journal. All right. So I just want us to use these 4 transactions to show you how you would actually record these transactions in the subsidiary journals. All right. So let's be mindful of the columns they have given us. So here are our columns. So here is our creditors journal. Because once you know how to do one transaction, you're going to be able to do other transactions. All right, so let's go for it. So they say we have creditors control, VAT, trading account. So let's open our book here. So let's open our book. So we just need to open the document that we can use to write. So I'm just going to go up here, and then I'm going to open my notebook. All right, just disappear on me. All right, so we say we've got creditors journal. That's the first journal they want us to do. So whenever, there are certain columns they will never give you, and it's because they are standard in any book. So that is the document number. Okay, and then it's followed by the date, and then you've got details. So these are standard for every book. So this you have to know. Then you can start putting the columns they're giving you. So you can start putting the creditors control account. You can put VAT, but because with creditors we are buying on credit, the VAT is going to be called VAT input. We said VAT input is when we are buying. So it will be VAT input. And then I think the next one they said it will be inventory. Yeah. So we have trading inventory. So we've got trading inventory. And then we've got sundries. All right, so we've got sundries. So sundries, if they say sundries, we will have a column for the amount. So this they're not going to give you. Just always remember, if you've got sundries, you break it down into two columns. You'll have a column for the amount and details column. So this must always come under sundries. All right, so the point of this is just to try and show you how we record a transaction. So let's go to our transaction number 1. All right, so the transaction number 1, here we go. So the document number, IV201. So we're going to put IV201, and the date is the 1st. All right? So details, so it's all given to you. So you see the source document number, you see the date, you see the details. So we start with this. So you're going to say document number IV201. That's the source document number. What is the date? The date is the 1st. So you're going to say the 1st, and then what is the details? Details is Igloo Pty Ltd. So Igloo Pty Ltd. So this basically you just reproduce what has been given to you. So now we go to the amounts. So what are we buying? We are buying inventory. All right? So we are buying inventory. All right? Because we've got VAT involved, we just want to see if they tell us that the amounts are inclusive or exclusive of VAT. So we go down to the bottom. They say the amounts are inclusive of VAT. All right. So they say the amounts are inclusive of VAT. So which means when you do your calculation, you take the amount to calculate VAT, you're going to say times 14 over 114. That's how you're going to calculate VAT because they say it's inclusive. All right. So let's go and do our calculations and record that first transaction, because once you know one, it's going to be easier for you to work on the others. All right, so let's go for it. All right, so we go to our book. So the amount is 31875. 31875. So always in the creditors control column, you put the total amount. All right, let me emphasize. In the creditors control column, you put the amount given to you. All right, so the amount given to you in this case is 31875. So you're going to say 31875. All right, see, no problems here. You just take the amount as it is given to you. So we need to calculate input VAT. All right, so they've given us the amount. So how do you calculate input VAT? We say the amount given, which is 31875, we say times 14 over 114. All right, so here we will need to use our calculator. Let's go to our calculator. All right, so our wonderful calculator. So we're going to say 31875 times 14 over 114. And then we want to work out VAT equals to. All right, so our VAT, so when you see this number, this huge number, don't be scared and don't write the entire number. All right, so this talks about cents. All right, so what we're going to take, the amount that we're taking is just 3914. All right, if the after comma, all right, we've got amount beyond 5, we just add 1, 2, 4, and we make it 5. All right, so but if it's below 5, we just take 3914 as our amount. All right, don't faint in the exam if you see this scary amount. All right, so we know that our VAT amount is 3914, so we can minimize our calculator. All right, so let's just we are here. All right, so we say our VAT amount is 3194. So in the VAT, we say 3194. So remember, we take this amount, 31875, multiply it by 14 over 114, it gets us VAT. All right, and then the transaction says, what are we buying? We are buying inventory. All right, so if we are buying inventory, then we must put the amount in the trading inventory column. So in the trading inventory column, you're going to take the difference between 31875 and 3194. All right, so we'll need to use our calculator. Let's go to our lovely calculator. All right, so it always comes in handy. Don't come for an accounting exam without a calculator. All right, you will need it. All right, so let's just cancel. And then we want to calculate the amount that needs to go in the trading inventory. We're going to say 3185875 minus 3194. What do we get? 28681. So 28681. So let's just recap the sequence of doing things. We say for all transactions going in the creditor's journal, we put the amount given in the creditor's control column. That's what happens all the time. And then to calculate VAT, you take the amount given, you multiply it by 14 over 114. All right? And then the difference in the trading inventory column, you put the difference between the two amounts. So whenever you are buying inventory, that's how you will deal with the transaction. So that's how we record the transaction in the creditor's journal. All right. So let's just illustrate this using the transaction that goes in the cash creditors allowances journal. All right, because one of our transactions will come here. So it will still have the same columns. It will have document number, date, details, creditors control, and then we can have the VAT input, trading inventory, and sundries. We've got amount and details. Let's just go and look what that transaction involved. All right, so trading inventory returned to the supplier. With that, we start with the document OCT 173. So let's go and record it. So OCT 173, what was the date? So the date was the 5th. All right. So the date was the 5th. It was returned to the same supplier. So you're going to say Igloo Pty Ltd. All right. We said in the creditors control column, you put the amount given. So what amount is given to you? All right, 2868.75. All right, so you see in your amounts they are showing cents. All right, maybe we will need to show our cents up there. All right, I was just not aware that they're showing cents here. All right, so we know that the amount given here is 2868.75. I said in the data, in the creditors control, you put the amount given to you. Then you calculate your VAT nicely. How do you do that? You're going to say take the amount, multiply it by 14 over 114. So here comes our calculator. All right, a lovely calculator. So let's calculate the VAT input. So we say 2868.75 times 14 over 114 equals to. All right, don't be terrified again. All right, so here because they use cents, you're going to say 352.30 cents. All right, so our VAT here is 352.30 cents. All right, because they returned the trading inventory. All right, so the amount I'm going to put here will come to the trading inventory account. I said in the trading inventory, so always remember, in your trading inventory must be your creditors minus VAT. Okay, so now we are going to calculate the amount that goes to the VAT input. We are going to say 2862.75. Okay, sorry, just want us to go to our lovely calculator here. So what we're going to say is 2868.75 minus 352.30. All right, so 0.3 is as good as 30, so we have the answer. All right, so our answer here in the trading will be let's just see the answer, 2516.45. 2516.45. So this is in the inventory column. So you can see that it works out exactly the same as with the creditors journal. The only difference is that here we are purchasing on credit. Here we are retaining the stuff we bought on credit. All right, so that's basically how we do that. So then how do we deal with transaction going to the cash book payments journal? All right, because we identified about two. So let's go to the columns that are required for the cash book payments journal. So here we go. Here is our cash book payments journal. So we have bank, creditors, VAT, trading, inventory, sundries. All right, so here we go. So what we're going to do, we're going to put these columns. Remember, our standard columns remain. We said document number, date, details, all right, and then they say you're going to have bank, all right, and then they said you'll have creditors. They say you have trading inventory. You're going to have VAT. It's going to be VAT input, because we say VAT input is when you are paying or buying. Okay, so let's just see if there are many columns. All right, then we have the sundries. All right, remember with sundries, I say you put the column for the amount and details. So you're going to have sundries. So you're going to have amount and you will have details. All right, so let's just put these two transactions involving the cash payments journal. All right, so the first one, you paid. This is your source document number. This is your date, and this is your details, Leak City. So let's put, so here we have CC 435, the date, the 4th. So you say 4th, details, you have Leak City. All right, so what are you paying for? You're paying for repairs and maintenance. Can you see that? So here, what happens? Let's just see the amount. 65625. 65625. So when you pay, you put the total amount in the bank column. All right. So 656.25. All right, so you see the difference between your creditors journals. With your creditors journals, the totals go to the creditors control column. With cash payments journal, your total goes to the bank account. All right, because with cash payments journal, really the key is cash and you have the bank. With your creditors journal, the key is your creditor, because you are dealing with a creditor, hence the totals are going in your creditors control account. All right, so then you are wondering, okay, so we have the total amount, so we have the VAT input. So we go to our magic calculator. All right, so we want to calculate VAT. So the nice thing about this VAT calculation is that you do it the same way. All right, if amounts are VAT inclusive, you do it the same way. What do? You say 656.25 times 14 over 114 equals to, so it's 80.59 cents. So you're going to go to the VAT column and say 80.59 cents. So now the question is, we are paying for repairs and maintenance. Do we have a column for repairs and maintenance? We don't have. All right? So if you don't have, don't regret. Don't throw in the towel. All right? If you don't have column, for instance, here we are buying inventory. We put it in the inventory column because we have it. They've given it to us. So if you don't have column for whatever you are purchasing, that will go to your sundries. So anything that doesn't have its own column will go to the sundries. All right. So under details, you describe it. So under details, we'll say repairs and maintenance. All right, remember, if we had repairs and maintenance column, we'll just put the amount in the repairs and maintenance column. But because we don't have it, we will describe and say repairs and maintenance, and then we will put the amount. That's why I said in the sundries you must have the amount and details, because in the details you have repairs and maintenance. So very important to put it, because there's a mark they will give you for showing your repairs and maintenance. But the amount, we determine it in the same way. So we go to our calculator, because we have the total amount and the VAT. So the amount that we take into the amount column must be the difference between the two, just as it was the case with inventory. So you're going to say 656, okay, 0.25 minus 80.59 equals to. All right? So we're going to have 575. Okay, so you will have 575. We say it comes here. 575.66. Okay, so it's 575.66. Okay, so that's the amount column. So in other words, if you have an item in the sundries, its amount must also go to the sundries. All right, but the process of working out the amounts is actually the same. All right, so the next one, we said it also goes to the cash payments journal. All right, so can you see here that we are not buying anything? We are just cashing check. All right, so be careful. When you are not buying anything, you are just cashing check, you are not going to have VAT, because VAT is on your goods and services. All right, so that's very important. So for this one, there is no need to calculate VAT. So all that you're going to do is you'll go to your details here and say CC 436, 436, and what's your date? Is the 8th. So your details is cash. So this one, because you are just exchanging check for cash, you just put the amount in the bank column. How much is it? 24375. 24375. You don't calculate VAT. All right. So what are we exchanging the cash for? It's PT cash. Eh? We don't have the column for PT cash. If you don't have the column for it, we say you take it to the sundries. So you're going to go to the sundries and say PT cash. And then if you put the description in the sundries, the amount must also go to the sundries. All right. So this is basically how you put this transaction. So you can see that putting the transactions, it's not a most complicated thing. All right. Because you just put the amounts in the relevant columns, you calculate your VAT, and you're fine. So the most important one is knowing the journals where you are taking the transaction to. So in making those decisions, please put the first notes that I've given you in front of you, involving the 4 categories of subsidiary journals, and see if you can quickly make a decision as to where it goes. Because if you take this to a wrong journal, even if you have put the right amounts, it's 0, because it means you don't understand where the transaction is going. So what I've done is I have given you a process to basically decide where the transactions are going. I've shown you how to put the amounts in the subsidiary journals. So what I would like you to do is to continue with all the other examples and see if you can know exactly where these transactions are going. And this will be very good practice for you for the purposes of your assignment. So I've given you the example. See if you can put them in the relevant subsidiary journals. And if you are confused, all right, make sure that you contact me in time and I should be able to explain to you. All right, so make sure that you understand all this, all right, and start working on your assignment in time. If you need clarity, just contact me. I've provided my contact details. All right, so thank you very much for the attention you've given me. I hope you have enjoyed the class, and I'll see you next time. All right, goodbye.